All right. Good morning, everybody. It is Tuesday, February 13th, and CPI day. So we have our catalysts to start off this week now. And we'll dive into some charts and kind of get set up for that. Just a quick reminder that derivatives trading is risky and past performance is not indicative of future gains. So we'll start with the twos and the tens. So remember that, and we've talked about this, in our elite lessons, but the currency market is, substantially almost 20 times bigger than the equity market. So you want to pay attention there because of central banks. You also want to pay attention to the bond market. The bond market is much larger than the equity market as well. The twos and the tens will often give you signals, or at least can tell you of coming changes. And so as we look into these, remember that the tens are economic gravity. So like health of the economy is what you want to think of. The twos are going to be typically where you're looking at rates and rate cuts and policy changes. And so anytime we go into FOMC or anything, I'm always paying attention to these. You can do this across any country. You can do this in Germany, look at the Bunds and see the same thing playing out. The shorter term rates are always going to be policy sensitive. And so if you look like what happened here last year, and I typically mark swing highs, swing lows. We had and I posted this in the room for you guys, but when we got over the March, high, and the bond market started rallying, so the 10-year started rallying, that tells you that 10-year going up is not good for economic health. And that started to sell off until October. Then the market started bottoming. We took out a swing low, took out another swing low, and market rally began accelerating in November. Now we are stuck in between, kind of range bound, as data still coming out. And we'll look at the 2-year here in a minute, but there's no policy changes there as well. And so our big line is going to be 423 on the 10-year. If CPI comes in, let's say hot, or beyond expectations, then this will come up and over and start reaccelerating, which will send the market back down. If we are at the top end of the range, as you guys know, on the probability bands, and so we can apply those to anything. Makes it a little harder to see. Again, when we get big data, those can get move substantially. We can break outside of them. But right now the setup is saying downside on this, that there's going to be no material change. If we look at the 2-year for the same thing, you've had since October, pricing in rate cuts, no rate cuts coming, no policy changes, as we saw here. So February 1st was, so right here was the FOMC day. Again, no rate cut means we don't break below this. And if we don't break below, complacency, now we're at the high end of the range. Unlikely we see this go up. We would need a significant increase in inflation to get, to start seeing rate hikes coming back in. But, unless inflation comes in very low, we're not going to take out 3.9. You guys can trade the twos and the tens. There are CME products for that. You can also, if you, again, we've talked about it, eventually getting into options and doing a course there, but, you can trade those on options as well. So the way that I keep my two chart marked, just I know where rate cuts would begin. Kind of range today, bigger on the upside, 445 to 431. Our mid pivot zone that's been holding, and then our lower end of our range that we're looking at realistically for today. On the 10-year, it's a little bit different. So we've hit the high end of the range and tagged it last night. Again, you European traders, get all the good trades, short the high end of the range and make, and again, bonds are very, very lucrative on a per tick basis. So you guys can, make some decent money there. Yeah, and if you guys, since we have 3 different rooms for questions today, if anybody can just let me know, if I'm missing one, I'm happy to answer anything specific within means. So on the 10-year, we're really going to watch 406 on the downside as I go into. So right here, bigger move is going to be 3.8, but I don't see that happening. So now if we get into the charts, and Raphael, I don't know if you compared our charts on the NQ. I did not getting these together, but I posted in the Elite Room all of my analysis for how I came up with the levels. So you guys can see 17,740 is going to be 48 is going to be kind of the line in the sand today. And that's where I'm really going to watch. Again, I don't think anything material is going to change. We talked about this last night that as we headed into the close yesterday, it was setting up for a down move. We got the down move in Globex before CPI. If we held up in before the data came out, I was going to be very bearish for that. This now opens up, a number that comes in line with expectations. So right here is going to be our big line in the sand at 17,740. Oranges are going to be your higher volume areas and where you're expecting, probably a stickier price action or more of a pause. The yellows are my my tradable zones, and then green is where I'm expecting, if we do break this, I'm expecting a big bid to step in. If we look at ES, and I did not put this on here, I can get into translating it, but these are what our flows look like from the systemics today. Again, if you can understand and learn and go through all of the process, but then understand, in all the foundations course, and understand how price will behave, then you start mapping, the actual strategies that are available for us to know where their flows are and how much, and be able to map $300 billion in exposures. At 28 is where the systemics will flip from buying about 200 million to selling 5 billion. So now, if we stay under 28, we're going to have competing sellers. So there's going to be a big incentive right now. And again, they only trade during RTH, so they're not Globex traders. We know that. So this move down doesn't trigger any of that. There is a big incentive to get back over 29 before RTH opens. If we don't do that, then I'm looking for 29 to send us down to 05, where then we would trickle into 10 billion. And again, these become big reasons where Mark Douglas says this in his Trading in the Zone videos. Back in the 90s, this information, wasn't available. Early 2000s, this wasn't available. And so the example he uses is you toss a rock into a pond and you start that ripple. So one big trader comes in, all of a sudden he moves price and starts triggering people stops, and then people start panicking and you get that ripple going out. We already know where these ripples and these rocks are going to get tossed. And so we can map these and understand where these big levels, 5,006, 5,028, increase, going from 200 million in buying from a systemic strategy to 10 billion in selling. This 10 billion will start triggering other people to sell. You'll start running people stops. You'll start making some people panic. And so, this then also, we have confluence with our other levels, but there's going to be a big reason to try to hold the market above this. If that fails, then we're going to look at coming down maybe to our line in the sand, although we would need a really hot CPI reading for that to come into play. So given our current regime and market states, I tend to think that we're more likely to stay sideways. The only thing that really makes me leery is volume. If you look at volume the last few days, and for those of you that have a copy of my spreadsheet, these are in columns BR to BV. If you compare over durations, this move up this week is very starkly contrasted to last week where volume was increasing. You have substantially decreasing volume on multiple durations, and that is something to pay attention to when you look at a PPV model. And so I posted that in the Elite Room. Dave, I am on the same contract for oil. I did not get that. So I don't know if that's something we need to look into for you or not. I think Steve found something with how to change the rollover date on other contracts, or like when the VIX and others. So just might be something to I haven't gotten into looking into changing that yet. As far as today from our correlations, and you guys can see it on the sheet, there's really nothing strongly correlated on for our main indices, so our ES or our NQ. We can look at the 6B and the VIX for the CL. 6B is almost a perfect correlation, so that's one to really watch if you're trading oil today. If you're doing currencies, 6A and 6N, and then if you're going to trade, probably the best trade of the week on the currency side, well, actually, that's probably not accurate. The 6J has been really good. The 6E laid that out, and this is going almost perfectly inverse to the dollar. And so as the dollar tests its big levels and starts failing, you get the same rally in the 6E. We talked about this over the weekend, and from a positioning standpoint, higher is probably more likely. And we laid this out over the weekend. The short here, we laid this out on Saturday, and then laid out the longs at these two levels, and almost came down to it, came about a tick away. Now we're making the bigger bounce. Again, you European traders, Steve, you're probably going to start trading this because it seems like your London Open is the time to get in for some of these bigger moves. And at $1,000 on a 30-40 tick move is pretty nice. So 6E we'll watch. I'm watching 1082. Really over 108.47 is going to send us higher. And again, if you watch the dollar, 105 is where I'm expecting us to eventually get to. We're kind of stuck right now, and you can see this in between these two zones at 104 and 104.30. If we come down to 103.60, expect a big bid. And remember, most times the dollar is inversely correlated to the ES because American companies and dollars make things more expensive overseas. But right now, we're not seeing that play out in the markets. Let me just see if anybody's got questions right now. Oh, that's weird. Dave, I don't know. Mine runs on my third instance of Sierra, not my main instance. So I don't know if that's something it's a factor or not. Very strange. So let's see. So we've got the dollar. So on the yen, I missed this last night. Again, this was a 3 a.m. trade, 4 a.m. trade. From a very basic standpoint, I won't turn these off. You can see here, last year's low on the yen, we came one tick away this morning. So, very expected. And you guys know, like yesterday, I was short the yen down to here. Then I went long back up to 673. So last night we made our down move. And for those in the current course, you'll learn, but this will become a setup. You'll learn an up thrust and a spring pattern. And so this was our spring pattern now to eventually target what's going to most likely be 677 to 678. The 6J does not have a micro product, so if for any of you guys that are interested in trading this, just be a little more cautious. It's about $6 a tick. The Australian dollar, British pound, and euro all have micros you can trade. So right now, 6A is over our line in the sand. And I think, let's double check this here. Yeah, so the 6A and 6N are almost they're almost perfectly correlated. The on CL, you've got, probably the VIX is a better proxy than the 6B, but on the 6B, what we can look at is, prior year's value area at 127, which we have that here, but then we have our other levels, based on different durations, and also on flow standpoint, 1268 is going to be kind of the harder level to get over. And if we look at CL, we're kind of, we hit that level. We talked about 78 yesterday, and that was almost where we came to. Eventually on oil, I'm looking for 84. We're going to look for a move up to here. And then we'll probably see inflation start, coming back and, dampening rate cut hopes. But that's it on the currency market. I always keep those on a separate screen, and I'll monitor for squeeze and liquidation trades. Right now, a lot are forced liquidation moves. And you guys can see the same thing on a lot of that. So, that's something to pay attention to. I did not do Russell and Dow levels today, so those are still on there from yesterday. I didn't get around to those. So I wouldn't put a whole lot of weight on these today, because I wanted to focus more on the 2s and the 10s and what's likely to be responsive on CPI today. So with that, it kind of gives you a brief overview of what we're looking at on all of these. What specific questions do you guys have? And if it's about, it can be about any of these. It can be about something else that you're doing on your own. For the students in the foundations course, this is all part of the advanced, but this is something you can you can learn. Focus on, as Steve said yesterday, focus on going through all of your exercises as you're supposed to. When I took Steve's course, and I think he posted it in Saint, I know I posted it in your group too, because the Stoics have to stick together, but I posted about just having a beginner's mindset and going in as if you don't know anything. And it was one of the comments from the book. And that was a big thing for me when I took Steve's course. I came in and I had a lot of this background knowledge that has helped really increase the edge far beyond what it was. He already had a very profitable system, and now we've been able to dial it in and identify when certain strategies are going to get triggered, when certain participants are going to step in or step out of the market. We can map and measure about 4 different participants right now, which gives us a huge edge over just about anybody. When I had a little background on me, I had restaurants, and when I had restaurants, I had to know, how weather, day of week, to go catering, dine-in business was going to be shaped by different things. Seasonality of my business. Stock market is no different, but anybody who's going to tell you that you can't predict flows or can't say how much is going to come into the market is basically just clueless and doesn't understand business. You have to understand these things, and that's what's giving us a big advantage here. But with that, I came in with a lot of this knowledge. I still went Steve's course. I stripped all my charts down, did everything exercise by exercise the way that he said it. That's what you need to do. So any new students that are on this, make sure you focus on that. Go through all the lessons, ask questions. I was a quiet one in the course. When I started, Jason was the one who had to speak up and ask all the questions, I think, for just about all of us. And then Saint carried that torch for the second group. Although most of you were a lot better at being active in the second group. So I hope everybody in this third group is active, but just make sure you're actually going through all of these lessons as you're supposed to. So, yep, exactly. Put anything you think you know aside. You can always bring it back in. But if you are going in with a mindset of something and then trying to um, learn advanced, if you don't actually have the right foundation, none of the advanced is going to help. I had a lot of this knowledge beforehand, and I still couldn't be profitable. When I had Steve's course, all of a sudden it was like a light switch clicked and everything just fell into place. And so it's really critical that you go through the lessons in the proper order. And then as you get through, I will become more helpful to you in the later lessons, starting about week 8. And then, anybody who's interested in any of the advanced concepts, I will make sure that we go through them ad nauseum until you fully understand them, which I think just about all of you uh, can attest to. Raphael, I don't know if you will have any other comments. I know you said our levels were pretty similar, but if you have anything different on NQ for today. Just checking through currencies right now. Separate screen here, just trying to on my other screen here, trying to see what is actually happening. In these markets. So okay. I don't know who else is on here. I know Jason was on earlier, but anybody else have any questions before? We've got about 15 minutes before we need to really focus and dial back in on some of these charts. Personally, I will be watching the yen today for a retest of 6728 for a possible long entry. And I'm also watching the 6E closely, but have been watching it very closely yesterday and then missed the entry earlier today at 1078. And now we're at 108. So 1082, I would expect a retest there and likely getting over. As we talked about with the COT report, and that was done over the weekend by my son. But we're expecting the 6E to likely drift higher. For rehedging behavior. Same thing we said would happen on CL, which has transpired, is the same thing we're looking at on 6E over the next few weeks to months. And I know for some of the professional subscribers, this is going to be a lot of new information and probably things that you don't, haven't considered or thought about. And so I can clarify parts of that if there's anything, specifically you want. I don't know how many people we have on here this morning, but well, let me shrink these down, make sure we have the 10, the 2, and the NASDAQ. The Nikkei had a nice move up last night. Again, we can also trade that one. I won't pull those up, but I think it was up about 2%. $2.89. So it was a nice move. Other things. So is it Coca-Cola? Yeah, Coke has their earnings today. Let me see if I can pull up. I'm sure that's already come out, but if you guys have any questions, let me know. Happy to answer. I'm just trying to see if we can check what flows on Coca-Cola are going to be like today. So I will post this for you guys in the elite room. I have not looked at the chart yet on Coke to see what their earnings were. Again, they're a bigger part of the Dow more than anything. So they're up 1.4%. Okay, so for anybody who wants it here this morning, here's the Coke flows. So Coca-Cola's there, and you can see we held the line in the sand at 59.25. 62 quarter is going to be your bigger level to watch if Coke starts, going even higher. And is probably going to be the outside of CPI is going to be the bigger catalyst on the Dow today. Yep. So I don't know if we look at just see if I can make a chart really quick. I'm betting that we came down and probably tested 59.25, but I don't know that for sure. So I'm just trying to create a new chart here to check this, but ooh, bonds are starting to come down a little bit. Switch to the consolidated tape feed, and it doesn't seem to like KO as a symbol. So right now we hit the top end of the range yesterday. So bonds are now starting to come down on the 2-year. The 10 is pulling off as well. But again, we're looking 414 is really kind of where we look for a breakout to the downside on the 10. 406 is really where we'd get any type of bigger change. Dollars coming down a little bit, and so watching 103.9827 on the USD or the DX if anybody's got the ICE feed. Let's see, what else do we have here? So the Swiss franc is coming up right to its kind of pivot point at 114.25. So anybody, if you watch the 6S, if we hold that 115.08 is going to be our target. Yeah, so Raphael, right now what the bonds would be signaling is an upside move in the ES if they continue their breakdown. So if yields drop, bond prices go up. If yields go up, bond prices go down. As we get here, if we go back, was it January 12th? Is that the day? What was the no, it's today's, what was the last? Well, here, I can show you. 'Cause I don't remember the day here. I know it was December 13th was the last one in December. So like the proxy here, because we're in the same range. This was December 13th here was, there you go. This was CPI day in December. And you could see what happened is bond rates. So when the data came out, you have bond rates, starting to drop. And then that would be the sign that the market could rally. This was CPI. This was FOMC day. Sorry. So, but same thing. So at 1 o'clock, we broke trend. And if we look back here to what happened December 13th, right here, when we broke that 4067, which is also where we've got that line in the sand, we did that on CPI when Powell spoke. So that's this right here. Powell spoke. That's the, breakout pullback effectively kind of trade. But bond yields going down like this. If we look at the ES at that same time, let's go back to December 13th. Same time, we had that big rally up. And so you can use it intraday. So we can see what the initial reaction is. We can also use it intraday on the bonds to see what the move is likely to be. And then at key levels, if the bonds are going to break down or hold up, look for, bigger moves as well. And so you can use it to fade the market or fade the yields. Again, there's from the ES standpoint, there are a lot of reasons. Again, pre-market doesn't matter as far as these go. The systemic strategies have, no bearing on anything. But as soon as 9:30 hits, these come into play. And so there is a big incentive, 5 billion reasons to get the market back over 28. Now, from a flow standpoint, if they are, and as you guys have seen this in the COT reports, building a position over the last several weeks, they flush down. And again, today's the day that data comes out. So if they're going to flush down and rebuild, they could flush down to here, but you have to be cautious because you don't want to start triggering all of this exponential selling, because eventually you're going to bring in too much unless they've distributed into all of this. So this is where we really want to watch our flow standpoint, because we go from 4 to 9 up to 22, and then at the line in the sand, 35 billion in selling just from one participant. That would, that would really shake up the market. I don't see that today. Inflation is likely to slow. The dollar is bouncing, and it's going to test its liquidation move right now. If you guys are watching that, if it comes up and tests that liquidation move and it's confirmed liquidation, that will help support these this upside into CPI. Unfortunately, we don't have any good correlations beyond that at this moment. So based on our matrix, well, actually, that's a lie. Looks like the 6N just came on for that. So let's take a look at that one. Looks like at the last reading here, 6N just came on. So let me pull this chart over. And if you guys have questions, we got a few more minutes left. Yeah, I'm having problems with that Coke, and I'm worried it's gonna shut down a chart book, but doesn't matter if we have VWAP on or off. But you can see, so 6985 is going to be was the level. Again, European traders get the better entries. We'll watch 6113 when this comes out. I'll have this up and I'll keep a closer eye on it. But right now with our correlations, we're close enough to assume a positive correlation that if this is moving, we can use it. If it's not, then then the ES will come back down as well. But again, remember, the biggest players in the game are going to be in the currency market. That's also going to be all your central banks. And so that's where we really want to, to be cautious and be looking at before this data comes out. So yen is not signaling too much strength at the moment. And as we're starting to pull back from 6,737 to 6,330. Euro is working very well on the levels, at least. Right up to our 108.09 that we had talked about yesterday. On our prep yesterday, we talked about this. And so you get the spring set up, and you guys can see that very clearly right there. Spring set up right to our target at 108.09. And then eventually we're going to watch, for a change in overall conditions at 108.2. Let's zoom this back out. So from a flow standpoint, if we go up, it's going to be harder. Just like yesterday's, we got to that 65. That was our big level. That has now moved up for me to 71. 71 to 75. We had that yesterday at 65. And again, had the whole thesis on where the market would close and everything, and nailed it, and still messed up the trade. Got out way too soon. So, got to be better today. But as we go up, you can see we'll get that same 4.5 billion selling would come in, and that's going to be the resistance into. We get up to 9.5 billion, and that's going to be even more. And so, depending on the CPI print, and likely that it's going to be a moot point. And as you guys saw hopefully you saw it yesterday. If not, I'll post it in the elite room really quick for you. But let's see, let me get in here really quick to post this. We got just a minute or so before the data, minute and a half. Remember, this is something that we've talked about. Now, it wasn't a whole lot, but there was, at least in terms of current state, hedging going into this. And so if these hedges have to get unwound, the drill. We'll go back up. So people paid for protection slightly. So unless CPI comes in really hot, probably over 3.6, even if it's a little hot or in line, or if it comes in under expectations, those hedges are going to unwind, and that's going to help be fuel for the upside. Let's see. So we're not really at the top end of the range on the bonds that make sense to take any risk. Started going up around 4 a.m. and let's see what time, 4:51. So it kind of led the market as the market came down to our major level. But it's not signaling anything. It's not coming back and confirming. The pound right now breaking down a little bit, and dollar holding. Looks like first reaction is going to be some type of down move down to 15. At least that's what the dollar's looking like at the moment. And then we can see what the data comes in. But again, with the way these hedges are set up, it's going to be hard to see significant downside, I think. So I'll pull up Financial Juice here. Oh, there's our first down move. Well, the first down move went beyond what I thought it would, but there goes the yields up. I have no idea. It doesn't matter what the data came in at. Let's see. So about, again, 30 seconds before the data came out, we could see that the dollar was saying down move. I just don't have the guts to short that in that moment. However, I am getting ready to see if there's going to be a different reaction. Remember, these hedges have to get unwound. This is just a flush of the short-term inventory. We will see what these reactions are. The yen just now broke that hold up of last year's low, which becomes very bearish for the yen, very bullish for the dollar. And the dollar is, so I'll just pull this up really quick, and I won't get into all the details on how we saw this, although you elite students should know. But holding that 103.98, we talked about it would test that. You get told it's going to hold here. You know it's going to test that that liquidation move and then straight up. This is our eventual target on the dollar, and that's a big move, helping descend all of these down. So that's how we can see that 30 seconds beforehand. The question is, do you have enough to risk on? I didn't, so I didn't take the trade. But I hope that helps you guys see how we've built a system and we can see these things. At the open, depending on where we are, your big lines are going to be 5,004, 49.78. So 78 is probably where I can start looking for some kind of move. 10-year, we're going to come up and we're going to test trend. And so that's, what did the number come in at? It had to come in hot. 3.4. So close to the 3.6 level. 3.6 is probably what we needed to see. Oh no, 3.9 for year over year. So here we go. So now there might actually be rate hikes coming in the picture. Beautiful, beautiful. So reinflation. They, lied on the jobs number. They lied on GDP, and we know that by the deflator that was factored in. We talked about that. Now it comes time to pay the piper. So watching the NQ where we were expecting a bid, although this is critical for the NQ, failing that 768. I did not even look at that. Hopefully, Raphael, tell me you got in, because you know what happens to that line in the sand. That's a good area. So I'm going to watch here at 77. Bonds should start testing and pull back. As they test, and we're looking for a pullback on those, and dollar is testing now its upper edge. I will consider I won't catch a falling knife, but I'm going to watch the rhythm here and look at a short-term move if we can actually tag 77. So I'm looking for 77. We came a point away from the level. Let's see what happens. Dollar, just a beautiful move up to 104.60 from 103.98. Oh man, just too many things to watch. 6E, we talked about this, that 108.2 being the next test. And on the data, there's the 108.2 test. And I mean, just a massive drop that probably is, I'm guessing 1,500 to 2,000 per contract. Would have been a nice trade. Had the level again. I'm looking for longer term upside there, but man, just not quick enough when I'm trying to call it out on Mike. So this is now, we talked about this. Bonds come right up to your level. You're looking for some type of resistance there. That's helping support the move up right now in these. And again, this would be a material change. This would be very significant if we look at the 10-year here. Yeah, your levels look a little better than mine on this, Raphael. So I may just have to start going back to getting advice from you on how to build out these NQ levels. Beautiful chart, man. So 10-year, this is what we talked about. This now becomes a material change that economic conditions are breaking down beyond what the Fed had been pricing in. The same thing happened August, market peaked, start going off. If this is now the market peak, and we'll see this show up in the COT report, but if they distribute it into that low volume move, again, from a PVV standpoint, we'll see that show up on next week's report. For those, because you guys do have access to this, for all professional subscribers and students, once you graduate the course, you will have access to this as well. What we're referring to is this here, where commercials went max long in May and started distributing. And then we had several signals we've gone over in our advanced course that told us this was going to be the market top. and there's the sell off down, they flip to negative, and then they short, and then they get back long right at November 14th, right where conditions change on the 10-year. Right here, they get long, the 10-year goes down as the market rallies. They've been buying this since, although this up move on low volume this week's makes me think that they were distributing. Because it wasn't as bullish of a move. And now the 2-year is also signaling that, rate cut hopes have to be dashed. And you're probably going to see comments coming out today that traders are going to push back their rate cuts for, later in the year. And likely, I think it was Citigroup yesterday had an article that came out that their strategist said that this could be more like the 90s where traders aren't anticipating hikes. They want cuts, but they're not actually looking at the data that says hikes could actually be coming. And the 2-year is calling for that. Wow. So again, short end of the curve will always signal policy changes. Long end will signal economic gravity. And then we can always look at the spreads. But dollar strong push 104.66. Our next area to really watch is going to be 105, 105.04 or 004. But this was calling it 30 seconds beforehand. Just was a little too fast for me as I'm trying to call it out on mic. And so hopefully Thursday when I do a live trading session with you guys, things aren't quite as fast, and I can actually get in some of these and call them out and help you guys see them. I'm looking forward to that. It'll be the first attempt at live trading with you. So but just again, currency market is much larger than the equity market, and that's where our leading signs are coming from. So now I would still like to see a test of this level. If this comes in, I'm going to watch what happens on the bonds. But if the 10-year starts breaking back below 427, and it does not actually establish new trend and it just wicks above, then this pullback will tell us that we can start going higher. 10-year, typically I'm looking at more often to correlate with the ES rather than the 2-year. The 2-year is just policy. And so, that will help lead us into next FOMC and any rate decisions that come out. But I hope this helped you guys. Any questions before we, kind of end today's session? Here we go. So these are breaking down. Now let's see. Ideally, we get a test down here. Maybe my level's just a little too low, and it might be worth the risk on that. It's just not quite at my level, which is not ideal. But the 10-year breaking is, I really would like to, probably worth the, it's honestly probably worth the risk to take it if the stop is good. But because I really want to be strict on my process, I'm going to wait for my level. So, questions, guys? Anything you guys want to go over? No, unclear on? Anything you want me to review before we end this morning session here? Hey, no problem, man. So here's the 10-year breaking down as this is going up again. Could be worth it if the risk parameters are there. I mean, your stop would be 6 points, which isn't ideal, but I would rather wait for my level and actually get the setup that I had pre-planned rather than front running my own level. Australian dollar breaking down again, which means that the New Zealand dollar is following. Man, just too many things moving. I mean, it's great, but if we look at the yen, we talked about this. So last night came down, front ran by a tick, last year's low of the year, pushed straight up. Now here's your exact move at 8:30, down, right back up, testing the level, and then again the nice short for, I don't even know, is that 50 ticks, 60 ticks? So $400 a contract. Yep. Yeah. So Steve had the level there at 81. Mine was at 80. And again, I'm just a little too, right after data and trying to do this, live, just I'm going to be more strict on waiting for my level. So, but good trade, you're up. Let's see, you got in at 86. So it's looking good. Probably going to tag 93 to 96. And then my guess is that probably where you're looking to take off your first and scale, or are you going to see the reaction and hold the whole thing? um, yep. So I would bet a lot of people were betting on inflation to be cooling. We talked about this, I think it was last month, that inflation would be rising again, but you know, they do what they do and adjust the numbers. I mean, the deflator they used in the GDP number was 1.4, which said that inflation was going to come drastically down from the 2.7 previous deflator. And you have to realize that that is unrealistic. And so they bump GDP up to, create whatever agenda narrative that they want and give Biden something to stump about. When in reality, they used a false deflator and GDP was not as good. And the concerning part is, we could see that trickle down now in the markets as revisions come in and then as new numbers come out that are actually more in line. That's not to come across in any way, shape, or form as a political statement whatsoever. That is just, there are narratives, there are agendas that play out, and when data comes out, you have the three biggest players to watch their comments on are going to be Biden, Yellen, and Powell, the three J's. So Goldilocks and the three bears that are trying to create this certain narrative. You can look at the QRA, and for those of you that don't know what that is, it is something to be aware of. But it's how the government's been functioning for a while now, and how they've been able to keep restocking the coffers. And so we have to watch what happens from Yellen there. We have to watch what happens, on the macro perspective, and what Biden says will happen with government spending, because government spending has been so large. Um, and then you can see, what Powell says will be policy. So those are the three that you watch, and different things that we take into account. And next time we have a QRA, guys, I don't mind for the elite group, remind me. I will try to keep an eye on when that is on the calendar, but we can trade that as well, because that is also something a lot of traders will watch. So now we've tagged my level. We're testing this here. Watching to see if this will close and give me an entry. And it closed white, of course. So kind of jumped the gun there. On the last 50 contracts, I went long, and it closed white. So probably not the best trade, but I'll let it play out and see. Stop is 4.5 points, so almost average. And given, that hedges could unwind, could be a decent trade, but it's not actually proper since we didn't wait for the true signal. So, saw the last 50, saw it was, looked like it was going to be correct, and then it wasn't. So likely to be stopped because it's not a proper trade. Now we have the proper entry, which would have actually ended up being probably 2 points better than mine. So that's so for new students, this is a good example of, why you absolutely have to wait for that to close. And I saw the last 50 contracts there, and I thought it was going to be blue and, anticipated, I guess, and it wasn't. And so then instead of getting the entry at 82, like I should have on after this signal bar, I got at 84. So this is why you're going through the course, why you're learning it, and we all still will make mistakes. But gonna let it play out. We have the bonds haven't actually established, over 27, and so that still says we could go back up. We know that hedges will have to unwind. Again, big selling comes in here at 78. So we'll just see. Stevie did the same. Yeah. So you guys will learn. Nobody's perfect. The name of the game is odds, and we've done a lot to stack the odds in our favor. We can, you know, we could see the move coming 30 seconds beforehand. The question was, did you have enough to take risk? I did not, so I didn't take the risk. But anybody who tells you that you can't trade data, just isn't accurate. If you are willing to take the risk, maybe if I hadn't been on mic, I might have. And that's not a bad thing. It's just being honest that there were enough signs, but as I'm trying to explain them, my thought process is slowed. And so, all right, let's see. And stopped. So now we're coming down to where I actually wanted my entry, 77. But if we stay down here, what you guys really want to watch then is a move back up to 5,006 that would then reject as this selling is going to take hold, and we could continue right back down to 41 today and testing our line in the sand. Now, for those of you that are unaware of this, at 41 or 43 here, if we break this, everything in the market changes. Everything that's been happening for the last several weeks shifts, and you have to know that. That is critical, because this would be one of the early signs, and we've already seen some of the others, as you guys know, on our flow standpoint, that those have started to shift. That's kind of the canary in the coal mine. We flip into a different regime, and things start to get really dicey, and we probably start coming back down to that contract gap fill at 46.35 that we talked about. And again, breaking below this would bring that in short order. So just some things to think about, as we move ahead. But if you guys have any questions at all, let me know. Otherwise, we can, be done on the session here. Happy to answer any questions you guys have, though, but if there aren't any, then we can be done. So. Okay, Screeter's good. I know Raphael said he was good before. Anybody else that's on here? Jason, Saint. And so again, NASDAQ, we flipped here underneath. So we flipped regimes. That is, I'm going to now have to make new levels, because that becomes very bearish for the NASDAQ. And then I will for elite subscribers, I will post our flow standpoint on the NQ as well, so you can see how many, the same amount for billions, 22, 9, how much is coming in and where. I will adapt that for this and post that, shortly. So. Okay, well, if you guys have any questions today, tag me. I will be around for the first half of the day until about London's close around 11:30 Eastern. And then reminder for elite students, we have prep tomorrow and then live trading on Thursday. So have a good day, guys, and safe trading out there today.